Imagine building a $200 million empire from a strip mall in Long Island. No Harvard degree, no Wall Street connections, no legitimate product, just a phone, a script, and zero conscience. Now imagine getting caught, facing 30 years in federal prison, and then walking out after just 22 months. Not broke, not forgotten, but richer, more famous, and more celebrated than ever. This is the story of Jordan Belfort, the man who scammed thousands of Americans, manipulated the financial system, sold his crimes to Hollywood, and somehow turned it all into a brand. Jordan Belfort was born in 1962 in Bayside, Queens, a middle-class neighborhood where most people followed a simple formula: work hard, get a stable job, live a normal life. But Jordan never wanted normal. At 16, while most teenagers were working small summer jobs, he was already running a business. He and a friend sold Italian ice and lemonade on a crowded beach in Long Island. By the end of the summer, they had made $20,000. For a teenager in the late 70s, that was serious money. More importantly, Jordan discovered something about himself. He loved selling. He briefly enrolled in dental school, thinking it might be a path to wealth. But on the first day, the dean gave a warning. If you're here to get rich, dentistry is the wrong profession. Jordan stood up and walked out. Day one, because fixing teeth was never the dream. Getting rich was. Soon after, he started a door-to-door meat and seafood business, driving through suburban neighborhoods, selling steaks and lobster directly from the back of a truck. At first it worked. The business grew quickly. But rapid growth without structure is dangerous. Spoiled product, missed deliveries, mounting debts. Within a short time, the company collapsed. Jordan Belfort was bankrupt. But he walked away with a powerful realization. It wasn't about the product, it was about the pitch. And if he could sell steaks, he could sell anything. In the late 1980s, Jordan entered the world of Wall Street. He joined a brokerage firm and learned how the market worked, how brokers spoke to clients, how deals were closed, how money moved. But just as he was getting started, disaster struck. October 19, 1987. Black Monday. The stock market crashed. The Dow Jones fell more than 20% in a single day. Thousands of brokers lost their jobs. Jordan Belfort was one of them. But while others saw a catastrophe, Jordan saw an opportunity. Because outside the world of major stocks and big firms, there was another market. Penny stocks. Cheap, obscure companies trading for less than $1 per share. Most serious investors avoided them. But Jordan noticed something important. The commissions were enormous, sometimes 50%, meaning if he sold $10,000 worth of stock, $5,000 went straight to him. All he needed was a phone and someone willing to listen. On one early call, he convinced a client to invest $4,000 in a penny stock. One phone call, $4,000. In that moment, Jordan realized he had found his arena, and he was about to build an empire. In 1989, Jordan Belfort partnered with Danny Porish. Together, they founded a brokerage firm called Stratton Oakmont. The name sounded prestigious, but the office looked nothing like traditional Wall Street. It operated out of a strip mall on Long Island, phones ringing non-stop, young salesmen shouting across the room, aggressive energy everywhere. Jordan didn't recruit experienced brokers. He recruited hunger. Bartenders, college dropouts, neighborhood hustlers, people with ambition, but nothing to lose. Then he trained them using a method he called the straight-line persuasion system, a psychological sales strategy designed to guide a conversation in one direction, toward a sale. The goal was simple: control the conversation, create urgency, remove doubt, close the deal. And it worked. Stratton Oakmont exploded in growth. Money poured into the company. Salesmen made fortunes. The office culture became legendary. Luxury cars, wild parties, champagne celebrations in the middle of the workday. Jordan Belfort had become the king of a chaotic financial kingdom. But behind the excitement, the entire system was built on fraud. The firm specialized in a classic scam known as a pump and dump. First, brokers bought large amounts of cheap penny stocks. Then, they flooded phones across America with aggressive sales pitches, convincing ordinary investors that these unknown companies were the next big opportunity. As demand increased, the stock price skyrocketed, and once the price peaked, Stratton Oakmont sold everything, leaving the investors holding worthless shares. It wasn't just speculation. It was manipulation. And thousands of people were about to pay the price. By the mid-1990s, Stratton Oakmont was handling hundreds of millions of dollars, and regulators were paying attention. Investor complaints began piling up. People reported massive losses. Stocks that had been aggressively promoted were collapsing to nearly zero. Authorities started investigating. The Securities and Exchange Commission opened cases, and the FBI began tracking the company. Agent Gregory Coleman started building a timeline, examining financial records, tracing suspicious transactions, following the money. Meanwhile, Jordan Belfort was secretly moving funds overseas. Complex networks of offshore accounts, shell companies, hidden transfers designed to protect millions of dollars. But eventually, the system began to crack. Some brokers were arrested on unrelated charges. Others felt betrayed by unpaid bonuses. Several agreed to cooperate with investigators. They recorded conversations, shared documents, explained the scheme. Inside Stratton Oakmont, chaos spread. Drug use escalated. Arguments broke out over money. The empire was starting to collapse from within. Then in 1996, the FBI finally moved in. Agents raided the company. Computers were seized. Files were collected. Phones went silent. The empire had fallen. By 1998, Jordan Belfort faced multiple charges: securities fraud, money laundering, wire fraud. He was looking at decades in prison. So he made a deal. He cooperated with the authorities, providing information on colleagues and partners. Dozens of former employees were eventually charged. Some received longer sentences than Belfort himself. Jordan Belfort was sentenced to 22 months in federal prison, a relatively short sentence compared to the scale of the fraud. While serving his time, he began writing about his life, a detailed story of greed, excess, crime, and Wall Street culture. That book became The Wolf of Wall Street. The story gained massive attention. Soon, Hollywood came calling. In 2013, director Martin Scorsese turned Belfort's memoir into a film. Leonardo DiCaprio played Belfort. The movie became a global hit. Audiences were fascinated, and Jordan Belfort, once known as a financial criminal, was now a pop culture icon. But behind the headlines and Hollywood success, there were victims, thousands of them. Teachers who lost retirement savings, veterans who invested life savings, families who believed they were building a better future. Many lost everything. Courts ordered Jordan Belfort to repay more than $100 million in restitution to compensate the victims of his schemes. But decades later, only a portion has been repaid. Many investors never recovered their losses. Their stories were not part of the movie. They never got book deals. They never got fame. Only the consequences. Today, Jordan Belfort works as a motivational speaker and sales trainer. Jordan Belfort once said, "I was guilty of being greedy, but so is everybody else." Maybe that belief helped him justify everything. So what do you think? Was Jordan Belfort a genius, a criminal, or a warning about what happens when greed goes unchecked? Let me know in the comments.